Welcome to the weekly stock market roundup for the week ending 3rd October, Friday, 2025. Disclaimer first, this is not investment advice, stock recommendations, or financial guidance of any kind. The information presented in this video is purely historical and reflects our understanding of past market events. Please conduct your own research and consult a SEBI registered financial advisor or other qualified and certified professional before making any investment or trading decisions. All stock market investments are subject to market risk. With the BSE Sensex, it closed at 81,207.17 on Friday, 3rd October 2025. It was up marginally by 0.06%. It had closed last week at 81,159.68. If you look at the year-on-year numbers, it was down minus 0.59%. It had closed last year on Friday, 4th October 2024 at 81,688.45. If we look at the 10-year numbers, you can see that the numbers have been quite good. They're still moving up, as we can see. If we look at NSE Nifty 50 now, the trend is somewhat similar. It closed at 24,894.25 as of Friday, 3rd October 2025. 2nd October obviously was a holiday, so as you can see, there is nothing here. Now, if you look at the numbers as of last Friday, 26 September, numbers were up 0.01% marginally. It had closed last week at 24,890.85. On a year-on-year basis, it is down minus 0.48. As you can see, it had closed last year at 4th October 2024 at 25,014.60. On a 10-year basis, these numbers are still showing a good, proper upswing. If we look at the global indices and compare them to Nifty 50 and Sensex, we see that this is how the numbers have been. The Chinese indices are here. Europe is performing over here. Nikkei has been performing quite well for the last 1 year, especially, and the last couple of years, in fact. Indian indices are here, and the Nasdaq has outperformed everybody by being here. If you look at the numbers performance, you will see that Nasdaq actually has been 469.76. This is index numbers in case you're wondering. As you can see, we've indexed them to 100. So 469.76 is the rise of the Nasdaq 100. Second have been the Indian stock indices. Nifty 50 has been marginally up 206.23. Sensex is a bit down 202.49 compared to the Nifty 50. Others have been a bit lower than that. Dow Jones is the one that has been fourth in the numbers, 174.23. Then Nikkei, as we said, Nikkei has been moving up the ranks quite well compared to what used to be once upon a time. Then the Euronext and the FTSE 100, the FTSE 100 has been the next two, and last of all have been the Shanghai Composite and the Hang Seng, the Hong Kong Stock Exchange Index. On a year-on-year basis, you can see that this is a stock market performance for the global indices out here. You can see that the global indices out here, the BSE and the NSE have been out here performing lower than the global indices. This gap that you see is because of the tariffs that have been announced, and this fall, as you can see, is for the tariffs also. And if you can see, the Hang Seng has been performing quite admirably. It has actually risen quite drastically from the low numbers around here, which is approximately around, I think, a plus mid of 80s to somewhere out here, which is actually performing well around, say, 115, 120 mark. This thing that you see, the Indian indices being out here, this is where the last year, if you remember, the markets had been, experts have been telling about the markets being overvalued. And this is how the numbers have kind of gone a bit down. The Nifty has performed a bit lower than the BSE Sensex, as you can see from the graphs here. The yellow, the orange one is the BSE Sensex. The blue one here is the Nifty 50. And the numbers are also reflected here. You can see Sensex has been a bit up, I believe. But the Nifty 50 on the year-on-year returns have been a bit up comparatively. Nasdaq has performed stellar performance over everybody else. Then Hang Seng has been, as I said, it has performed better. Then Nikkei has been performing quite well. Then the European markets, FTSE 100 and Euronext have been again performing quite well. Dow Jones, Shanghai Composite has kind of brought out the rear. Now, for the impact news, this week, IPO and capital markets, Tata Capital raised 4,641 crore from anchor investors ahead of its IPO. Prominent investors included LIC and Norway's sovereign wealth fund, Statens Pension Fund, which is the world's largest sovereign fund. In fiscal growth policy, the finance minister said that India's economy remains resilient but warned against complacency. She announced a record 11.21 trillion infrastructure spending for financial year 2026 and noted risks from US tariffs on Indian exports. If you remember, a couple of weeks back, we had talked about how SEBI had pushed for infrastructure investments from pension funds, mutual funds. So if you look at how a country develops, no developing country goes to a developed country by not investing in infrastructure. So the government has got it right. Infrastructure push is key for India to become a bigger, stronger economy in the future. In terms of caution from RBI macro signals, the RBI governor has observed that gold is emerging as a new barometer for global uncertainty and warned of a possible equity market correction. Amid global uncertainty, markets face pressure from US tariffs moves and foreign capital flows pulling back. But reports indicate that domestic institutional investors continue to play a cushioning role during foreign institutional investors' exit phases. Now, foreign investor sentiment and selectivity, despite heavy outflows, some foreign investors have posted gains in their India exposures, such as Goldman Sachs' 10,000 crore India portfolio, where core holdings have returned 50 to 155% year on year. Its portfolio includes companies like Car Trade Tech. It had been up 155.35 year on year and 61% year to date. Transformers and Rectifier, SGS Enterprises, and Pearl Global Industries. So not everybody is kind of pulling out money from India. Some are staying here and they are posting good numbers. And so sector performance for last week, BSE Metal, Oil and Gas, Commodities, Banking, Financial Services were the top 5. The metal was up 3.93, Oil and Gas 2.50, Commodities 2.35, Banking 2.19, Financial Services 2.05. And the bottom 5, tech was the lowest with only 0.05% upswing compared to last week. Focused IT, information technology, FMCG and consumer durables were kind of the remaining 4, 0.63, 0.66, 0.75, 0.91 respectively. In terms of the NSE, Nifty PSU Bank, Metal, Mid-Small Financial Services, Private Bank, Mid-Small IT and Telecom were the top 5. The upswing was 4.43 for PSU Bank, Metal was 3.93. The rest are 2.75, 2.53, 2.33. If you compare them to the weekly highs, the 52-week high and 52-week lows, you can see that the numbers are you can make out where exactly the sense where it is right now compared to what it was within this year, last 52 weeks. Now, in the bottom 5, FMCG, consumer durables, IT, healthcare index, and auto were kind of the bottom 5, and 0.59% upswing for the FMCG. The rest of it up. Consumer durables was up 0.72%. IT was 0.74% up. Healthcare index was 0.93% up, and on auto was 1.01% up. And the top stocks week on week, for the BSE, there's a BSE Financial Securities, KIOCL, Sammaan Capital, Aegis Logistics, Tata Investment Corporation, where these are top 10 stocks. The last one, the top 10 was Vodafone Idea. You can see the percentages delta for these: 20.72 KIOCL, 19.62 Sammaan Capital, Aegis Logistics 7.64, Nuvama Wealth Management 10.49, Sun TV Networks 10.32, Vodafone Idea 10.10. Now, if you look at the stocks that are down, JSW Holdings was down 11.76%. First Source Solutions was the next one, down 8.46%. Aditya Birla Real Estate was down 7.15%. Bajaj Holdings and Investments 6.84%. eClerx Services 5.43%. MedPlus 5.26%. Dixon was down 5.21%. Hitachi was down 5.02%. Krishna Institute of Medical Sciences was down 4.90%. And Hyundai Motor was down 4.89%. In terms of the NSE, Sammaan Capital again was kind of leading the pack with an upswing of 19.12 week on week. Network Technologies 17.53. Aegis again here 16.40. Tata Investment Corporation 15.96. Mangalore Refinery 13.12. L&T Finance 11.53. National Aluminium Company 10.31. Sun TV Networks again 10.07. Vodafone Idea 9.95. And Nuvama Wealth Management 9.91. On the bottom, the ones which lost out, which lost out the most was First Source Solutions at 8.33% down. Minus 6.67 was Aditya Birla Real Estate. Minus 6.38 was Bajaj Holding and Investment. Dixon was down 5.32. Nava was down 5.29. Hitachi was down 5.16. eClerx, KPIT, Max Health, Sobha were the remaining 4. Now, if you look at some of the names, they were similar to what were happening in the BSE also. So, obviously, it happens. Those companies kind of move in tandem. So, this is what it is for this week. I hope to see you again next week. Thank you so much for watching. Have a very good week ahead. Goodbye.